Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. I'm going to be going over the data sets, the earnings, and the SM excuse me, and the S&P for the week of May 5th, 2025. And with that said, let's go ahead and jump straight into the data. That was not the best recording, but we're going to keep it. Alright, so Monday, really not a whole lot going on. We have the composite or the S&P Global Composite PMI. That's not really not a big deal. The non-manufacturing data, the ISM non-manufacturing data, really not a big deal. But since there's really nothing else that day besides the 3-year Treasury auction at 1 p.m., very likely this will be what carries the market one way or another. I'm not too concerned about this data right now, though. Tuesday, really, again, not a lot of data. There's the imports and exports at 8:30 a.m. and the short-term energy outlook is really a nothing report. The 10-year no auction is actually a pretty big deal. That's at 1 p.m. This auction's probably the biggest auction we have to worry about right now. And I shouldn't say worry, it's more just be aware of. Because a lot of people are talking about dumping US Treasuries right now, and that's the one that will get dumped if it happens. So just be aware of what's going on with the 10-year right now. Now, on Wednesday, oh, let me back up for a minute. There's this Atlanta GDP uh, Q2, but again, it's really not going to be a major mover. There isn't a whole lot of data this week. It's mainly on Wednesday. Now, going over Wednesday, here's where the big data comes in. So we don't really have any data until 2 p.m., but that's when the Fed's FOMC statement is released. Where did it go? There it is. The FOMC statement is released, and the rate decision. This is very likely going to be a pause. It's priced in 96.8% right now on the CME to be a rate pause, so don't really expect too much out of that. Then the press conference, that's Powell giving his statement and then answering any questions from some of the reporters after. Usually there's quite a lot of volatility on the FOMC, or during FOMC anyway. It can happen all the way from the statement release all the way until Powell starts going over the questions with the reporters. Um, some of those questions can really raise the volatility both upward and downward, so just be aware of that moving into this week. That FOMC is always a pretty, dicey event, so if you're trying to set up positions, just be aware of that. Now, Thursday, we have the weekly jobless claims. I'm not looking for anything too much in those. However, we did have the continued jobless claims tick upward quite a bit last week. So I'm kind of interested to see what's going on with that. As you can see, the initial jobless claims is anticipated to be quite lower. So the market is pricing in the jobless claims coming down, but we did see a large uptick last week, so we'll be keeping our eyes on that. That's something that I've been kind of talking about, these outliers and the job numbers. That was kind of one of them. It wasn't a major one, but it was enough that we should start paying attention to it. Now we have some uh, non-farm stuff. That's the quarter 1 report, so that's just a they're redoing the report. I can't remember the word right now. There's the 30-year bond auction at 1 p.m. that day. Now, usually the 30-year is pretty important just because it's the longest term bond right now. It's not like they have the 50-year terms yet or the 100 term or year term yet. They eventually will, but that probably won't be for a while anyway. But for now, the 30-year is the longest. So, it's always good to kind of see what's happening on the long end. This has been starting to pull back upward. It'd be nice to see the yields pulling back downward again. we'll see throughout the week. Uh, and actually going back on that, I do plan to actually do a full TLT video later this week. So we'll circle back around to that later on. I'm just not gonna cover it in this video because this video is gonna be pretty long already, and I've had a really long weekend. I know I'm always saying I'm having a hard time, but life goes on. Anyway, Friday we have two uh, Fed speakers talking pretty early in the pre-market. So I'm assuming it's very likely in some other country, but I could be wrong. Um, don't really know what this is, but I wouldn't put too much weight on it. Now there's Fed Waller speaking at 11:30. Very likely anything he says will be hitting the market. Same with Fed Williams. Um, very likely those two will be saying stuff that will move the market since there's really nothing else that day that's going to move the market. Unless Williams or Barr says something in the pre-market that pushes it one way or another. I don't really see the data moving. Now there's all these Baker Hughes stuff that's just position stuff. Doesn't really matter. That's not gonna move the market really. So overall, this week is kind of a boring week in terms of the data. There's basically the big data set, which is the FOMC. And when going over FOMC, it kind of is in two parts because there's the statement and the rate decision, and then there's the actual Powell interview. And that's kind of the big deal is the Powell interview. Now, the statement can definitely bring some volatility if the market isn't pricing in a move, but seeing how the CME group has it priced in at 96.8% right now, the market should all be on the same page that we're pretty much going to be pausing our rates right now. Now, going into this week's data, and the camera's going to look weird for a second. Let's see. There we go. Okay. So this week we have a bunch of earnings, but nothing really too big. Now, I'm not going to talk about every single earning here. You're welcome to go to any of the free websites that provide earnings, and this is from Earnings Hub, so earningshub.com, and you can see the earnings calendar. I'll be happy to provide you guys the link if you're interested. Now, there's a few earnings I am interested in this week, and it's basically AMD and SMCI on Tuesday evening. And then we also have ARM on Wednesday evening, Coin on Thursday evening, but the coin earning really isn't going to matter too much. It's usually going to be based on Bitcoin anyway. There's some littler earnings in here that are going to be fun this week. Like there's Riven, there's Upstart Holdings, there's DoorDash, Dutch Bros, AMC, IonQ, Occidental, DraftKings, Rocket Lab, SoundHound, Shopify, Qubits, Uber, Disney, Novos. Yeah, I think I covered most of the ones the group plays. I am pretty blind though. Oh, there's Root as well. I know some of you guys are playing that. Other than that, think I covered. There's Wolf as well. I know some of you guys are in Wolf, but yeah, there's no major like super tech earning or anything. The only major ones are basically AMD. Um, SMCI, it really doesn't matter if it hits or misses. The market doesn't care about that right now. ARM, kind of the same deal. The market doesn't really care if this hits or miss. Um, it's mainly going to be AMD because AMD actually does have some significant weight in the chip market, and Not saying the SMCI and ARM aren't important, but it's really AMD that's going to be the mover for this week. So that's earnings and that's data. Really not a whole lot this week. It's kind of a bland week in regards to the data sets and the earnings. Just a quick reminder before we get into the technical analysis. If you've been finding value in my insights, consider joining my Patreon. For just $12.99 a month, you'll get access to my trades, courses, and powerful tools to help you grow as a trader. I'd love to have you be a part of our team and community. And it's less than 43 cents a day. So if you'd like to join, click in the link in the description. Thanks. And getting into the technical analysis, going into the daily chart as always, and I don't have this written down because I actually had it written in a different notebook, so I'm going to be reading these values off the screen. And I'm partially blind, so just bear with me. I will read the correct value, but it might just require some squinting. So, alright, the market closed at 566.76 on Friday, and I'm actually going to rewrite these down just because I want them in this notebook. And the 5 mont is currently at 556.99. So it's extremely likely we see the 5 mont opening between the 558 to the 561. Okay, and this is a really important one. Basically after every Sunday, so the Monday open is the most important time to write down the 5 mont change because that's what it changes over the weekend. That's really important to get your 5 mont written down for the start of the week. So whatever it opens at tomorrow, make sure you write it down. It's really important, and we will kind of go over why that's super important in just a couple minutes here. But I do want to cover the rest of these levels really quick, just because this is the Sunday video and it's always important to kind of touch on everything. So the Tenma is at 545, 88. So it's pulling upward. It's very likely going to pull upward towards the 550 this week. So I'm just going to make a note of that. So that is pulling upward. The 20 mont is now starting to pull upward as well, as you can see slightly. Maybe if I expand this, as you can see that's starting to pull upward. It's starting to make the upper Bollinger and the bottom Bollinger expand as well. But let's go over the actual 20 mont. The 20 mont is at 535.04. So this is very likely going to start pulling upward towards the 540 range. Okay, so I'm going to write that down, 540. Now, the 200 mont is this big red level right there, and I should actually make that thicker up. I want to do that. It makes it a little easier to see it when it's thicker. So we have the 200 mont. The market is still trading under the 200 mont. Not too far, but we are still, under that level. Technically, this is a rejection so far. So if the market continues bouncing downward, that would be a 200 mont rejection. Okay, I'm gonna hide the drawings. Now, that level is at the 570.13. Now, again, that 570 is really strong, but we might slightly pull up above this. And the reason why is because the upper Bollinger. And as the upper Bollinger is starting to create room above that, that means that if the market does pull up towards the upper Bollinger, it's going to push above that 200 mont level. Okay, so the upper Bollinger is at 574. I think it's at right at, yeah, 574.08. Okay, so that's pulling upward. If we start moving upward towards it more, it's going to push upward further. So last week we were kind of on the thesis that that upper Bollinger test would, or that upper Bollinger play would be more in that 570, 573-ish range. Now that we kind of rejected it, we kind of need to retest support, and then we can head back upward. But now that's going to be even higher. That's going to be a lot closer to the 580 range. So the upward room is actually expanding quite heavily, even though it doesn't look like we have a lot of room right now. And I'm going to hide the drawings 1 second more. No, I'm going to hide the moving averages and the Bollingers, show the drawings, and just show you guys that we still have this bare structure. Okay, I don't know what this random line over here is. We're going to delete that. I'm pretty sure that's just nothing. Okay, so we still have this major inverse cup going on. And we do have potentially a inverse handle for this cup being formed right here as well. And I've been talking about this over the last few weeks now that this was a super likely potential. Now, if we continue rejecting here and if we say retest the 5 mile, that is going to start creating a head and shoulders. Now, is it going to pull all the way back down to this, this 508 range? Not likely. That's quite a ways away, but it absolutely can pull up into this 520, 530 range and still create plenty of liquidity to form a shoulder there and, form a breakout. Or, breakdown, I mean, not breakout, breakdown, if it's gonna break down. Okay. Um, so that's kind of what I'm looking for there. That's not the line I wanted to delete. So right now we have the upper Bollinger above us. We have the 5 mile below us. Now the 5 mile is not below us too much, and kind of what I was alluding to when I said write down where the 5 mile is because just to quickly describe the moving average test, it's generally $1 to $2 above the price and $1 to $2 below the price. So when the overnight price is at 562.83, if the 5 mile opens at say 560, well, the 562 is the upper bounds of the 5 mile test, and the 558 would be the lower bounds of the 5 mile test, which means that technically we would already be very close to um, engaging that 5 mile test. And what comes from the 5 mile? Let me see if I can just pull this up for a second. What comes from the 5 mile is either the 20 mile, which is again currently at the 536, so that's quite a ways away, and I'm going to mark this as blue, or the upper Bollinger. Now, the upper Bollinger is at the 574 currently. So our room is starting to expand both upward and downward, even though it doesn't look like that, because we rejected the upper Bollinger on Friday. That essentially means that we now need to retest support because the upper Bollinger is a whole $12 above us now, compared to only the $2 range it was. Now that we rejected it, the upper Bollinger is still going to be moving upward because the Bollinger Bands track the 20 mile, and since we are pulling back upward, the 20 mile is starting to curve back upward, which means that the Bollingers are going to be expanding. Okay, so hopefully we're all on the same page there. Now let's go over to the 4-hour chart, and you can follow this on your hourly chart. I'm just showing this on the 4-hour chart because it's a lot easier to identify on the computer compared to like the phone. Now I want you to look at this nice cup we have formed. Okay, and I drew this totally at the wrong spot. It should be right here. We're gonna redraw it. I just messed up really bad. Oh. Let's draw the cup right. Okay, there's the cup. Okay, we have not fully hit the top of the cup, but we hit extremely close. Basically within a $0.50 range. So what I look for at the top of a cup, I know there's a lot of lines going on the screen, but just bear with me, is to start forming some bear structure. Now, what do we have formed in here? We have a bunch of small bear structure forming. We have potentially a very small head and shoulders going on right here, followed by this larger head and shoulders right in there. And if that forms a right shoulder, and I'm going to delete this or pull this larger one up there. So you can see the bear structure is starting to form. And the reason for that is to create a handle downward. I don't know how far this handle is going to pull downward. We'll discuss that in a different video. We just need to take it step by step for now, which means that going downward, we need to look at this 5-mod test and see how the market reacts to it. Do they pull downward and reject the 5-mod and then head upward again? Or do we see them head downward for further liquidity within, like, say, the 10-mod range or even the 20-mod range? Um, those are very large potentials. And because we still have this head and shoulders pattern forming and it hasn't been validated yet, we could still potentially still pull down all the way to the 5 or the 480. Okay, so this can turn into a very large inverse cup. Now, looking at some of this upside, um, bulls and the bears are wanting the same thing here. Okay, and I know I say this often, and some people may not understand it, but right now, both the bulls and the bears are going to want to pull back for liquidity here. The bulls want more uproom, and the uproom is expanding, but it needs to retest support. Once support has been retested, so support being the 5-mo, uh, then we can push upward towards the upper Bollinger if there's enough liquidity and if the market is wanting to have that breakout. And again, there is plenty of room for the market to head upward. There's a gap at the 596, which is actually a really nice gap. The 576 basically we're a little above us right now, and then all the way up to the 600 range again. So plenty of liquidity. We have this really strong selling channel here. So as we're starting to near the top of it, we do need to be careful of, major bear structure because again, this is a selling channel so far. We haven't broken out of it yet. And because we haven't broken out of it yet, we need to be very aware that this can pull downward very quickly, especially when we've had so many green days, you know, time and time again. There is the rule of 9, and so technically we are on day 10. It's very likely we're going to have a red day, which, technically the market's already red right now. But anyway, expectations of the week. Consolidation. We should expect a lot of chop and retesting of support. I truly expect support to be retested all the way back to the 20 mil, whether it happens this week or next week. But we do have AMD earnings this week, which truly that's going to be the big earning that will carry the market or not. If AMD does really, really bad, that might even pull the market downward. So we'll see where it goes. The data is really not that thrilling this week either. So this week's kind of a bland week in the trading world, unfortunately. However, I am sure that President Trump and whatever other factors in the market will make it very interesting as always. So I look forward to talking to you all in the next video. I'm going to end it here. Trade safe tomorrow. This isn't the area to be going crazy in short duration stuff. This is the area to just kind of be patient and wait for the 5-mod retest. And we will reset up the 5-mod and then, either head upward or downward from there. So trade safe. Have a great day. Let's have a great week. And I will talk to you all tomorrow.